What's going on, everybody? It's November 9th, 2022, the log episode number 48. And today we're going to cover US 500. Price action unfolded. Nothing too eventful, but I believe today gave us a lot better view and picture of what's going to play out tomorrow and Friday, especially tomorrow with CPI numbers. I believe we're going to have a large range day tomorrow, so just be careful. I want to draw your attention back to the weekly time frame. Reason being is because I think it gives a little bit more clear view now. Same thing with the daily time frame I touched on in the Telegram. If you look here, we've been annotating how price returned back into a premium. Use the tail end there of the bearish order block, extend that out in time. And then this week we pumped up. This could be a bearish order block in a sense, but I don't really like it. It is your last up close candle. I want to see if a 3-day gives a little bit better view. Yeah, still nothing there. But I do like the way price looks. We haven't set a low yet, and I think we can expand lower. To me, there's no reason for price to go higher. So that's really good news for us. Daily time frame, fantastic. I love the closure of today. Finally gave us some really good confirmation. And even before we closed, I was annotating that we should probably expect 36.94, 95 area to be ran out by the end of the week. Relative equal lows resting there. So I was annotating yesterday how we wanted to finally see a one-way direction with price to finally, put that nail in the coffin per se with, the bias and the narrative, because we didn't fully close above the premium end here of the SIBI. So I was still neutral coming into today, and I overall was really wanting, lower prices. I don't see a reason for us to run higher, but of course, you're not always 100% correct. So going into the 4-hour time frame, if you extend this out in time, we just barely closed above it, and it's kind of just a weak closure. And even ICT said this week with the time change and elections, expect a little bit of coloring outside the lines this week. So what he's basically saying is something like this: how price closes, but it's not really a full bodily closure above the premium end there. It's just a little bit, and then we trade lower. So right when price was right around resting inside of this area, I posted in the Telegram, if we trade through this last down close candle, which is your bullish order block, extended out in time, if we trade through that, then to me, we're going to ultimately look for the sell side liquidity that we've been looking for. Reason being, we're now breaking bullish PD arrays. So if you're breaking an opposing side of PD array, and this can go for any time frame, that is showing you its hand, it's showing you what it's doing. So it's no longer respecting bullish PD arrays. Do you see how on Tuesday it respected that bullish PD order block, and then coming into today, and we didn't respect it at all, and we traded right through it. Leaving, this is my area of interest. I do hope that we trade up into this area by tomorrow, because I think this would be a really good shorting opportunity for us. The 4-hour time frame for value gap resting there. If we can drive up into there and then sell off, that would be fantastic. 1-hour time frame. Go ahead and put this on here. Sell side liquidity was attacked underneath here. Relative equal lows resting there. Sell side liquidity there. And then we have a small fair value gap resting here that you can extend out in time and use as, partial taking or your take profit if we do end up going short. And then ultimately the relative equal lows, and then the sell side liquidity objectives still remain that were outlined from the beginning of the week. So we weren't totally off on the bias coming into the week, but it just goes to show how understanding when your narrative is in certain places where it may not, look to be as if it's coming true, or you have to fully know with context and reason that it's fully invalid. And I wasn't fully, the bias was still not fully invalid coming into the session today. So that's why I was still leaning on the bearish bias, but I was still, open to a bullish bias possibly. So that's how you kind of navigate your narrative. And you want to have logic and reason proving either A, that your narrative is no longer viable, or B, it is still viable. So in this instance, it's still viable, it's still an option. Okay. So looking at the morning session, man, was it was a rough session. I didn't participate. I advised basically everybody to sit out of the session because I didn't think it was really something that anybody should be in. And there was definitely some opportunities that you could have gotten into, but I like to lean on the side of higher probability and better models and better, even coming into the session, we still didn't know the overall narrative. So in hindsight, yes, it looks easy, but when you're in the actual real time, real moment, it's not as clear, not as easy. Okay, so going down into, let's say, a 15-minute time frame, I highlighted pre-New York session to pay attention to the sell side liquidity resting there, and then the buy side liquidity. So we were just sitting basically coming into the session at EQ, and I couldn't tell you honestly what way we were going to go. I said I would prefer the sell side liquidity to be ran out, and then I wanted to see how we reacted after. So digging down into, let's say, a 5-minute, this is the beginning of the session right here. So this is my opening 8:30. This may be your 9:30, 7:30, 10:30, whatever. So this is the open here. Prior to that, if you look a little bit closer, we ran out buy stops and we displaced lower. So we have a market structure shift underneath the low there. Extend out all these down close candles in time. That is your breaker. So extend that out in time, all of these down close candles. And then we have a fair value gap resting there. If you go to the 15-minute, small fair value gap resting here. And then you have a second one there as well, plus the bearish order block. So ICT posted a review over his trade. He actually went short off of this fair value gap. Now the reason being, price already used this fair value gap resting here, the bearish breaker, the 15-minute time frame fair value gap. So price used that and then displaced lower, leaving another fair value gap. So you could have went short here. Your stop loss should have been of here, but me personally, looking at even ICT's trade, which he usually always takes partials, I mean, he was up, if he went short here, he was up almost 2R. And for me, that's perfectly okay for me. Like, especially if you went basically EQ that fair value gap, you're basically up 20 points. So for me personally, that's my personal model. I like to take partials and basically take fully out at 2R, maybe 3R, and I'm done. Because the amount of times I've been stopped at break even, the amount of times that, I've tried to let, winners run and they turn to losers, I've just developed a system now that works personally for me. So that's the way I like it. I think he was just honestly trying to take a loss today to show people that he can do that, but the trade went in profit regardless. So it's just kind of funny. Price then retraces back up into the 15-minute fair value gap once more. That's your parent PD array. So the 5-minute is subordinate to the 15-minute. So you should expect possibly price retracing back up into that 15-minute. And then you're drawing liquidity. So you would be looking for the previous day low to be ran out. Price then displaces lower, attacks the sell side liquidity at the previous day low there. Traces back into the range there. You have a nice 5-minute fair value gap resting here. Dealing range low to dealing range high. You're inside of a premium. Nice little shorting opportunity there. Reason I didn't take it is just because price was, I couldn't find the narrative today. I honestly couldn't. in hindsight, yes, this all looks easy. This looks, like, oh, why didn't I take that trade? Why didn't, but in the moment, it's not as easy to say that. That's why I think back testing is sometimes can fill your head with that this can be so easy, but in the moment, you're analyzing so many different things, and it's not as clear as when it's done after the fact. After the fact, it's like, oh yeah, I could have went short there, but in real time, I personally didn't like that shorting opportunity. Now, I was away from the charts, and I thought this was a pretty good shorting opportunity. Price displaced lower, and in my head, I was looking at the 1 hour, the 4 hour. I saw no reason or context for price to go higher. So I was originally looking at the 15-minute fair value gap here. And then if you go down to the 5-minute, it's layered. So you have another one resting there. Price retraces up into it using the EQ of it, displaces lower, take profit or partials underneath the low there, leave a runner. Price retraces once more into this fair value gap resting there. And then we ultimately displace lower. And we've been moving sideways ever since. So I think those were probably the best shorting opportunities. I was away from the charts at this time. It was pretty deep into the PM session as well. So am I mad or upset that I missed these moves? No, I honestly could care less. So I'm happy that price finally has given us a clear view on which way it wants to go, in my opinion. I believe that we will attack the sell side liquidity tomorrow. Again, the 4-hour time frame for value gap is my point of interest. Let me just dig into the 3-hour, same thing resting there. 2-hour, not so much. 1 hour, I think that's a great point of interest for us. I really, really do. I think this is the best shorting opportunity. So go ahead and mark that out on your charts. Look to the left of you, semi-balanced price range there. Just pay attention to the fair value gap. 30-minute, same thing. 15-minute, not so clear. But the fact that it's layered from the 4-hour, I really, really like it. Daily time frame, pay attention to the low here. That could be your bear shorter block extended out in time. I would only look for price to basically touch the end there, if anything. Let me see the 4-hour, where that lines up. Yeah, so perfect. That's my point of interest for us to go short tomorrow. Okay, so with that being said, I'll talk to you guys tomorrow morning. Good luck and good trading, everybody.